Supposedly the Humpty Dumpty economy. Wouldn't the U.S. economy be better off if the government had done nothing from the get-go? Nothing. In other words, free market capitalism would have solved the problem sooner and delivered a true economic bounce-back recovery. But these big government interventions have stifled the economy, which is crawling along at a 2% plus bottom. Here's a recap of some of the things thrown at the wall that haven't worked. Tax hikes on the rich and successful, gigantic spending stimulus, temporary home buyers tax credits, temporary payroll tax cuts, cash for clunkers, massive Fed money creation, 0% interest rates. Everything they've done runs counter to free market capitalism. And you know what? If it would have worked, it already would have worked. These Keynesian policies undermine free markets at every turn. And I'm getting very bored with it. Let's bring in our guests. We have CNBC contributor Jared Bernstein. He knows a lot about these interventionist policies because he's the former chief economist for Vice President Joe Biden. And we welcome back T.J. Rogers, distinguished CEO of Cypress Semiconductors. TJ, I want to begin with you because I am so frustrated and down at the lack of economic progress. And I say if we had done nothing, just nothing, let markets make the corrections, we'd be better off today than we actually are. And I'd like your distinguished opinion.
Of course. Of course, you're right. If we look at the period of prosperity, Reagan through Clinton, they were all characterized by low government spending, leaving money in the private sector where it's better invested. Today, take the top 1% argument. If you take money from me, I'm a top 1%er, then it will come out of my investments. By the way, I invested at their founding in venture in Google, Facebook, and Cisco. So it'll take money out of my investment portfolio, which is here in Silicon Valley, invested properly, and send it to Washington for some boondoggle BS project, you know, this quote, shovel-ready, unquote.
Okay, so let me jump in here. First of all, hello, TJ, and hi, Larry. And TJ, sounds like you made some darn smart investments. First of all, there has been no tax increase under President Obama, so I'm not sure what TJ is talking about. Hasn't happened. Second of all, I hate to bring some facts into the discussion, but I simply have to. When this president inherited this economy, GDP was contracting at a nightmarish rate of 9%. Okay, I'd never seen anything like it. Jobs hemorrhaging 800,000 per month. Literally 2 quarters later, in the second half of 2009, GDP had moved from massive negatives to positives, a swing of about 13%, from -9 to about +4 by the last quarter of 2009.
Jared,
the facts do not support your case, Larry.
Jared, hang on a second.
Sure.
Wait a minute.
It is precisely, Jared. TJ, hang on one second. Let me just get this in. My criticism and my frustration with all these failed government programs is this. You are right, Jared. The economy had a very deep contraction, 8 or 9%. But the history of free market capitalism in this country is that deep contractions are followed by substantial springbacks. And that has not happened. And so I'm saying it's not happened because all your government intervention, has stifled it.
What you guys are talking about, you're
TJ.
trying to make this a Democrat, you're trying to make this a Democrat-Republican thing. It's not.
No.
I mentioned, for example, Clinton as being a small government, low-spending president, which he was. Okay, the guy that messed it up is George W. Bush. Okay, that's not an anti-democratic thing. What's the problem is that our current president, who happens to be a Democrat, has come along with the same failed policies, which is big government spending. And please don't hide behind the fact you haven't passed the tax cut yet. You and Warren Buffett are running around trying to take more money out of the private economy as we speak.
Look, you can't say that the president has been a massive spender on the expansion side, but he's a massive contractor on the contractionary side. Look, I think the Clinton and the Bush and any other example, you have to understand what it was like in 2009 and that 100-year flood with literally trillions of dollars of wealth evaporated based on a housing bubble. By the way, a bubble that came out of very much the kind of economics that, Larry, with respect, you've been touting for so long.
No,
a bubble that came out of the government.
A bubble that came out of the government. It didn't come out of markets. It came out of the government.
So basically, Larry, one thing.
Neither of you guys, hang on a second, let me just make this point. Neither of you guys are on to the point that I'm making. If you look at the whole history of business cycles in the United States. Deep recessions are followed by substantial recoveries.
Not for the last 20 years.
I beg your pardon.
Not for the last 20 years.
The last 20 years, we had small recessions. When you have a deep recession, like we had in the 50s or the 70s or the early 1980s, you're supposed to come from -8 to +8. The reason you haven't gotten it is because you've had bad policies stifling the marketplace. That's my point, Jared Bernstein. And if you're bumbling around at 2% economic growth, 3.5 years into this, it tells me the government has stopped
under
it.
socialist
let me
government.
address your point.
There's no recovery under socialist government.
Oh, come on. Now, that's just name calling. That doesn't add anything to the discussion. Look, here's what you're saying, Larry. So let's get to your point, because you're making an argument. I don't think you're right, but it's an argument. So you're saying that had we not undertaken the stimulus, the TARP, the whole, that growth would have bounced back faster. Okay,
that's what I'm saying.
According to Rogoff and Reinhardt's literally 100+ years of data analysis, that wouldn't have happened.
Not from this country. They did not use this country. That is the flaw. And guys like Professor Cochran of Chicago and Professor Taylor of Stanford, I'll go to you, TJ, on this, because these foreign studies are not about American-style capitalism.
It's all about leverage,
TJ,
my man.
I'm just saying this, TJ. It's not about Republican and Democrat for me.
I agree with that.
I'm saying,
on the company
TJ,
side,
if
let
we
me
had
talk about
just
the company
left the
side for a minute.
economy alone, it would have done better than it's done.
Let me talk about the company side for a minute. You know, I talked about me as a person taking money from me. I don't need it, but I think I can do more for the economy with it than the government can. But let me talk about T.J. Rogers, CEO. I'm hunkered down right now. I'm not hiring. I don't trust the government. We are socialist. It's not name-calling. We are centralized more than we were before. We have more centralization of government than many of the socialist democracies in Europe right now. And I'm hunkered down because I don't feel it's prudent for my shareholders to try to expand and create jobs in this environment with this government.
Corporate profits as a share of national income were higher in 2011 than any other year on record going back to 1929.
The
stock market has doubled. That stock market has doubled. I mean, if anything, you guys should...
The reason my profit is higher, the reason my profit is higher, the reason my profit is higher is that I don't hire anybody because I don't want to spend money because I'm unwilling to expand. Yes, it's true corporate profits are higher.
Please let me finish, TJ. Look, it seems to me that if you and Larry want to take a clear-eyed look at the economy, you'd be coming to exactly the opposite conclusion. Given the hole that we were in, how do you explain the bounce back in financial markets, the strength of corporate profitability, if everything the government did was completely wrong? It makes no sense.
TJ, why?
There is no bounce back just because we're profitable. That's the point I made. I'm profitable because I'm not hiring and I'm not spending money on people. Therefore, I'm putting it on the bottom line and storing it away.
Created 4 million jobs.
And TJ, why are you holding back on spending on people? Just tell me why.
Because your little chart you showed in the beginning, cash for clunkers, this and that. It's only going to be another month before we have another harebrained scheme about how more socialism will fix the problem socialism caused.
Name calling. Look, it's just pure name calling. If you actually talk to people who aren't interested in just making up stories and calling names, they will tell you the reason they're not hiring.
That's me. I don't make up names.
If the reason they're not hiring is because they're not facing the demand for their goods and services that they need to see. And there we would all agree 2% is too slow. And if you look at Europe, you'll see that the prescription that you guys are arguing is exactly the wrong medicine. We actually need to do more to boost the economy because of the contraction of private sector
TJ Rogers, I want to give you the last word.
Of the economy, centralization of the economy has been killing us since George Bush took office, and more centralization of the economy, so I don't have to deal with his name calling. More centralization of the economy is not going to help.
I feel like you're being impervious to evidence.
First of all, TJ Rogers, thank you, sir. You've been terrific to play tonight. I appreciate it. Jared, my friend, please go back and look at the business cycles in the 1950s and the 1970s and the early 80s. What you will find is that very deep recessions are normally accompanied by very strong recoveries.
Not when it's a financial market bubble.
No,
especially
not when we have unprecedented government Keynesian intervention. That's the point.
Which we often have in those recoveries as well.
We'll debate this, and by the way, TJ's right. The George Bush story wasn't any better. Up next.